First bar जो है वो it's closed above the all-time high. This is we have closed above the all-time high. Now we are trying to go and retest the previous day high. So let's see what's gonna happen once the 15 minutes are going to close. The first 5 minutes is a doji bar. This is a bullish doji bar. Closed below the 50% of its own range. Bar closed below. I think like that. Aslan, जैसे तुम एलिमेंट 12 में जाओ मतलब वो जो असाइनमेंट है ना वो आईसीटी का देता है वो टेम्पलेट होती है वो तुम्हें दे वहाँ पर वो पहले भी स्टार्ट हो अब वो डालोगे फिर उसके बाद अब मेरे पास वो पड़ी थी कभी वो मैंने जमा था First 15 minutes is about to close in 46 seconds. So once this close, I'll be taking a scalp of the breakout of this range. Let's see if we can get to 852 once we move below this point. There's a certain criteria for me to enter a short position as the market is moving down. I'm generally more interested in taking a short, but I have to be very careful right around this blue line, which can be the strongest support bulls can get. The strongest support bullies can get since we are in a trading range. So I might go against this support, but it's not encouraged. It's not. Once we now the criteria is shifted slightly, right? We have the New York Open. The first candle is untagged. The first candle is untagged. The high of the first candle is 969. 969. What was the high of yesterday? The high of yesterday was 969. Yesterday's New York session, right? I can aim for a scalp for a short position. Might aim for a scalp for a short position, but I'm not gonna hold it for long. I'm entering my position here right around once this candle is going to close. If it closes below these two ranges, then I might take a short. So I'm repeating this again. This blue line is the line in the sand for the bulls. They need to get below this point and give me a closing, even on the smallest time frame, 1 minute time frame. But I need some sort of confirmation for me to take a shot. If I take a shot right around this point, my target will not be that far, right? I'll be aiming for 843. 843 will be my target. My stop loss will be above 927. Since it's a risky trade right at support, I'm not entering without a proper confirmation. That confirmation will be once we get a closing below 884 or this range or this blue line. So there are three confluences right around this point, right? So the idea is the same. I'm still aiming for one risk to reward trade. It doesn't really matter if it's towards the upside or towards the downside. So as I'm scalping, I am more biased towards the upside because the general trend is towards the upside. The higher time frame trend is to the upside. If the people who watch me know how basically I trade, this is a range, overall a trading range. So both longs and shorts are dependent on complete context. Since we got a closing above, right above this point, immediately got a closing below this 915 low, this is an indication of a range. So it doesn't really matter if I go long or short, but on the hourly time frame. Once you go higher up time frames, you will see that we are still towards range, trending towards the upside. So it will be much better if I get my scalp to the long side, because best case scenario I can hold that trade for long. Another indication of a range is we are gyrating around the moving average. The moving average is basically, for reference, I am using 20 period simple moving average. You can use exponential, SMA, EMA, doesn't really matter. This is a reference point. So I'm using 20 period moving average throughout all of the time frames from weekly to 5 minutes, using that as a reference point for the reference of a higher or the lower time frame. So we are right at the 50% of our initial range, initial balance. So the market is in a ranging conditions. Ranging conditions is we got a closing above, immediately got a closing below, validation, then invalidation. Validation, invalidation makes the price stuck in a particular range. The act of invalidating the context basically. Got a validation, we got validated right around 930 point. Even on the higher time frames, we got validated, invalidated. So what is the best for the bulls? They need to give me a closing above the moving average on the 15 minutes time frame that can continue the trend towards the upside. But as of now, we are ranging, and I might take a short. I take a short. Coming back to our smaller time frame, long as we are chopping within this yellow range or the initial range, I cannot execute the trade. So once we get a closing above or below this range, then I can take a scalp. Not aiming for swing trades. I'm just gonna take a scalp with a high probability. So I'll be risking half of this range, that is 42 points. So I'll be risking 42 points to get 42 points. So the usual scalp. Volatility index is at 14. Hello, Scalper D. How are you doing? Volatility index is at 14, which makes this market slowly grinding higher towards the upside. A trending market, but a choppy trending market. So it's better to take scalps. Reason being, there are a lot of scalping opportunities, a lot of one-to-one risk to reward trades within this market. This is not basically swing setups. Even if I try to take a swing setup from this point, I'll base maximum what I can get is 1 to 4, 1 to 5 is to reward ratio. But odds significantly gets lower for swing trade. So it's a lot of opportunities in the scalp with a high probability. Defined stop loss, like I'll be risking exactly 42 points. I know what I'm risking in points, and I know with aspect to odds or probability that this scalping setup is a high probability setup. So one variable is that is subjective, which is the lot sizing, right? I exactly know my stop loss is going to be 43, 44 points. I'll be aiming for 43, 44 points right around the previous day high, which is a reasonable target. If we go long from this point, not this point, once we get above this range, right? 24,000 generally is a reasonable target. So that makes it a high probability trade. So depending on the probability or odds, I can tweak my lot sizing. Right. Now the criteria is aligned. We on the regular trading hours, basically on the QQQs, we are above the moving average on the 5 minutes time frame. I'll tell you a reference what I'm talking about. Go to the 5 minutes time frame on the Qs. On the Qs, we were always in long. We still are always in long. So the high of the first bar is still untouched, which makes this price a 80% chance that we will take out the high of the first bar. There's an 80% chance. So that also adds to the probability, right? So I'll be happy to go long rather than short. I'll still go short if it moves below this point. But I have to be very careful because I'll be shorting it right around the 20 period moving average on 5 minutes. So I'll be shorting right at support. But I'll still do it. My lot size will be lower. On the short size, if I go long, my lot size will be higher. Time frames are aligning. The 5 minutes, we have 3 minutes left till this 15 minutes is going to close. Not only that, we are closing above the 20 period moving average on the 15 minutes, on the 5 minutes, on the regular trading hours. So the time frames are aligning, right? We might get some sort of a third leg up, third leg, the first leg, second leg, and third leg, something like that. Something like that. Then it can collapse. Since I'm not taking a swing trade, I'm not worried about general direction. I'm worried about standard deviations of ranges. Like this is an ATR of 15 minutes. 15 minutes, the market within the 15 minutes is on average moving 85 points on average, right? So that's a single standard deviation, right? I'll be aiming for half of the standard deviation projected towards the upside. That is equal to previous day high. So a lot of confluences. Now execution, right? This is a strong indication we are, when the market opened, this was the support I draw. We are getting support from this point. On the 1 minute, the market is still trending. Not a single close below the prior bar low makes it a high probability. Now, what is the criteria? The criteria is once we get a closing 1 minute time frame above 969, I'll be putting pending order, something like this. I'll be buying this, putting my stop loss right 926. When I'll do that, my stop loss will automatically will be below New York Open, the 20 period moving average on 1 minute, and half of the standard deviation. And third case scenario, what if the market doesn't break towards any side? Then it's the best thing. I'm saving myself from a choppy ranging market, right? So it's a robust setup, it's a robust system which I'm trading here. Things to keep in mind, we are right at 59. The hourly candle is about to close. Let's see how the hourly candle is performing. The hourly candle is, oh, we have a criteria. We need to close above the prior hourly bar high, which is basically we need to close above the New York Open for a good confirmation. So if I put my stop loss right at 928, my stop loss will be beneath the prior bar opening. That's another confluence. Now, now I'm expecting some volatility. We have closed above the New York Open. Let's execute right around this point, aiming for the high, previous day high. The criteria for the scalp is I need a closing above this range. Volatility we are seeing right now is mm, not real, basically not natural. This is the reason because of the hourly candle close. We are expanding our range because of the hourly candles ATR. It's gonna straight itself out. Just give one leg, second leg. This is the first leg. We got a sec. This is the second leg. We might trap. We closed. This is the high of the hourly candle. This is the low of the hourly candle on the 1 minute. Keep in mind, every hour, every 4 hours, every daily, weekly candle is treated the same way. It's basically, you can think of it like a circle. It expands itself. For example, if it started from this point, it's gonna expand itself, something like this. So it's gonna take out the low, take out the high, might expand. So the reason we are seeing this sort of a time distortion is because of the hourly ATR. The moment hourly candle closed, we closed above the prior bar high. We are trying to retest this point. We might take out this low because how far is it? It's really, it's just give me a minute. It's 20 points, 21 points below, right? So we might even take out the open on this gap. We might take out this, but I'm going to execute once we get a closing above 969. Keep an eye on this. 56 minutes left to this hourly candle. We are in the second hour of the 4 hours candle. This was the open of the 4 hours right around 9 a.m. The 4 hours candle opened, right? Along with that, an hourly candle open 15 minutes, so it starts again. The cycle repeats again. So this is the second hour of the 4 hours. If that makes any sense. Making some sort of a bull flag. This is it's not perfect, but can be seen like that. Yeah. Have we taken out the high of the hour? We haven't taken out the high of the hour. We haven't taken out the high of the open of the New York candle. This is the high of the open. So this makes it very high probability. There are some bulls who are front running this point. Those who bought the close of this bar. There are some bulls who bought the close of this bar. It's not a bad setup. They'll get out right around this point. Risking one, get one reward. And honestly, this is a high probability setup. Because setup is not, it can be like this tight, but it all depends on the risk to reward. If I'm risking one, I'm getting one, right? So 950, 965. My criteria is something, once we get a closing above 969, I'll be entering, putting my stop loss at 927, target 013, 24,000, 013. I think you guys get the point. I should remove this. Okay, so the bulls who bought the close of 10-3 bar, they have gotten half of their risk. We have tried to get a closing above the bull flag. It's still trending. It's still trending towards the upside. We have 3 bar micro channel. This is really nice. I'll be executing this trade once we get a closing above this point. I need a closing above this range. Target is the previous day high. That is 24,003. We haven't gotten a validation, still haven't got validated. Need a validation. Target is the same, previous day high. Risking $210 to get $217. Everything is the same. It's if it knocks me out, it knocks me out. It's gonna hit one side over the other side. I don't care where it goes. I'm not gonna close this trade. This is the setup which I trade. So over a long period of time, it has provided me with basically 65 to 70% win rate. Long period of time. So that will be around years or 2 years worth of forward testing. Art is too messy. I'm risking 40 points, 42 points to get 42 points. Or 5 minutes. This is a high one buy on a 5 minutes. Still, if it knocks me out, I'll just close this trade and carry on with my day. Since the reason is I'm not gonna fight this today. The reason is this is a ranging condition. This we got a closing above, we immediately got a closing below, so not gonna fight it. It's not worth it. We had an idea. I executed on the idea. Well, that's the best part. On the 1 minute, we got a closing below the 20 period moving average on a 1 minute. Can I close this trade? I can, but I will not. The reason is if I mess up with the variables, the data I've tested, back tested, it doesn't really count that way. If I'm changing the conditions of my setups, then it's gonna give me skewed results. We have 2 minutes left till the 5 minutes is going to close. Fifteen minutes candles about to close. In a 1 minute, let's see if we get a closing above New York Open or below New York Open. All right, it's very close to the stop loss. Might just hit it. Basically 42 points. If it gives me another opportunity, I'm not gonna take it. I'll just trade tomorrow. I'm not gonna fight this. It's very, very dangerous to fight a ranging market. So there's a strong closing below the New York Open. All right. Thank you for your time. I'm not gonna fight it. I don't. I'm basically warning you to not fight it. We got a closing above, immediately got a closing below, closing above. It is a range. I am not just